Hello everyone, today is Tuesday, November 11th, 2020, November 10th, 2020. My name is Evan. Welcome back to another midweek stock market analysis video. It feels good to be back. I took the entire last week off. I can't remember the last time it went a whole week without publishing a video here on YouTube. I think we're up to 500 and change of these videos. So I've been doing it for a while, doing it very consistently. Thanks for bearing with me, with us over the past week. So I'm back in action. Let's jump into everything that's gone on. There's been a lot that's developed here over the past week, lots of themes to talk about. So let's dive right in. On today's market, you can see stocks were pretty mixed on the session here. Dow Jones, IWM standouts to the upside, 1 and nearly 2% respectively. Take that in contrast to the S&P 500, which is down just slightly on the day, basically flat, and the Q's down 1.65%. That's also magnified here by the 5-day change numbers. You can see what's going on here. The Dow is a clear leader, IWM a clear leader, S&P's pretty strong as well, but the Q's notably underperforming. Again, 3.34% over the past 5 days to the upside is basically strong in any general context. But when we take it on a relative basis, we certainly are seeing a pattern here, which we're going to talk about throughout this video. All the major indices are above the 10, the 50, and the 200 period simple moving average. If we scroll down to sectors here, take a look at this top performing sector, 15.41%, massive standout to everything else. Financials also very strong, 9.38%, industrial 6.71%. Those are the outperformers to the upside. And to the downside, we've got utilities, staples, discretionary, 2 out of the 3 being pretty boring and defensive, and XLY in there as well, 3.1%, and those are your underperformers on a relative basis. Now, if we look at major markets here, oil at the top of the list, international at the top of the list, and S&P 500 also making its way in the top 3. And the downside, we got volatility down almost 30% in the VIX, natural gas down 3.5%, gold down 1.78%. So let's jump into the charts. Let's try and make some sense of these numbers here. We are looking at TC2000. We've got our equity market grid open. Price is the white dashed lines. The colored dots here are a custom smart trend filter indicator of ours. It is based on price, volume, and time. You can download, you can learn more about this indicator. Get it yourself at the link appearing in the top right of your screen. So if we start off here with a weekly time frame, you can see that things are looking pretty good here across the board. Now, the S&P 500 is still printing a yellow dot here, so that basically tells us that there's still some indecision going on here, but price itself is pretty far above this smart trend filter, and what that also will tell us is that it's only a matter of time before this will basically turn back up. We usually give the benefit of the doubt to the prior signal here, which was green. So the bulls basically in control here despite the yellow warning sign, but let's just, keep the yellow warning sign in the top of our mind. Nasdaq is also printing a yellow sort of indecisive sign. Price is above it. IWM is the only of the 4 markets on this screen actually that is a pure green signal. It's been green actually for the past 5 or 6 weeks. So when we see the Russell 2000 starting to outperform and really lead to the upside, if you were to look basically at this signal here over the past 3 weeks, when the S&P was yellow, Nasdaq was yellow, and so was international markets, the Russell wasn't. So good things tend to happen when things are in strong uptrends or just in uptrends, and we're seeing that play out in the Russell 2000. ACWX also yellow. So that's the long-term time frame. If we go to the daily chart, and we take a look at the closer price action here, we can see that the S&P 500 turned up last week on Thursday. It printed its bullish signal here. It has been rallying, basically since. Obviously had pretty strong session coming into this week, and it is above this, printing a bullish signal here. So life looks pretty good for the bulls. Nasdaq is a little bit more concerning here. Based on today's action, it's back below its smart trend filter. So this also turned up last last Thursday, printed a buy signal on the daily chart, but that's falling back down to a neutral signal here. Again, we give the benefit of the doubt to the buyers, so let's keep an open mind here. I think buyers, it's still on them to essentially lose control, right? It's on the sellers to take control at this point, but we do see this being the only neutral. If we look at the Russell in the bottom left, this is also bullish here. Bottom right, ACWX, also bullish. So we essentially have 3 out of 4 of these markets on the daily chart buy signals. The Nasdaq is the most under pressure. So let's look at the price action. Let's get a little bit tighter here on what's going on. And there's been a lot that's gone on here. Of course, the elections were certainly through the thick of it, at least the counting process. And we had obviously a nice surprise with the vaccine potentially on the way, or at least further along and getting through those stage 3 trials. So that gave a nice boost to the upside here for stocks. But not all is rosy here because of primarily the way we ended yesterday's session. So again, if we look here at the S&P 500 on Monday, let's actually back up a little bit, because the last time we did a video, we were trading down here prior to the election going off, and we were down in kind of the trough here around that 3,300 level, and we saw a nice multi-day rally all the way back up towards the top end of this range, back towards the October and September highs. And then of course yesterday was the catalyst that really got us above the highs, but notice they were rejected. So yesterday was a day to take notice, because we broke to new high ground, new high water mark, highest level in the S&P 500 going back in its history, and we rejected those levels. More sellers dominated the action over that 3580 area. We closed at the lows, and then you can see, of course, today was basically, a hammer, but kind of more indecision on what's going on with Monday's price action. So the read here for the S&P 500 is, this to me is the controlling candle right now. This to me is the controlling action Monday's session, the loud high volume outside reversal session. And that's what's going to dominate the near term action here. And that's what needs to be sort of taken seriously and effectively reversed if you want to get bullish on this market. So for me, the way I would look at this is, yes, we do have an uptrend in place. That is positive. And so what we basically want to see is this market get back over this, I'd call it 3580. You could use the opening price of this day here. So 3583. And that would basically get you over the closing. That would get you a new all-time closing high, and that's basically what you're looking for here. You're looking for the S&P 500 to establish a new all-time closing high. It failed to do it on Monday. It didn't do it today on Tuesday. So can we get back, take out this old high here from September the 2nd? That's what would start to repair, unlock momentum to the upside, and really start to get this uptrend back in motion. So that's what we'd be looking for, ideally on a weekly closing basis. That'd be even better to see us close out the week over 3580. That would be encouraging. If we close where we are right now, it is actually a new all-time closing weekly high. So that is encouraging. But we want to see us back over 3580 on a daily. I think that would give us some confidence. If you're contrarian on this market, I posted a chart on Twitter, and I think this goes for lots of different markets, specifically Nasdaq is in top of mind, but this really applies to lots of different individual stock sectors and indices. If you're a contrarian here, if you've been trying to bet against the market, we had a couple of things that basically happened now. So we had this outside reversal day. We have the VIX, which is now back to the lower end of the range. So really, if you kind of think about this year, I guess recently, since September, we really haven't has, stabilized underneath 25. The VIX has been very stubborn, staying over 25. If you take a look at where it was, again, going into election day, it was up around 40 or so. And so that was the point where there was max fear. We talked about that in the videos. We talked about the steep backwardation at play. We talked about the fact that everyone seemed hedged or nervous about the election. Well, if you take a look at where the VIX is now, that's really not in place anymore. We're sort of back to just the normal standard 2020 worries of this market, which is around a 25 VIX. So now that nobody's worrying, it's probably worth, worrying ourselves a little bit, because not everyone is hedged, completely hedged as they were prior to the election. So VIX back at 25. You've got this well-defined outside high volume reversal day. I think if you're a contrarian now, it can make some sense. Again, this isn't advice. Everybody's got to come to this on their own conclusion and strategy, so on and so forth, because I'm not going to be there every step of the way to update my analysis. But I'd say at this point, it looks like an interesting spot to either lighten up, put some hedges on, take some shots on the short side with some well-defined stops. Because again, if we start closing over 35.80 on a weekly basis, then you're kind of null and void, and you probably don't want to be short the market anymore. So, to take a shot on the short side, I think makes some sense. And we're going to skip right to the Qs, because this is the market where I think it's most applicable. And we talked about this, posted a chart yesterday about this particular index. But basically the Qs here have been the hallmark bull market leader for 2020 for many years, but primarily for 2020, the performance here has certainly been exaggerated in tech. And what we saw in the Qs this week was not even a move to prior all-time highs. So we didn't even take out the September highs. We basically got just over this October pivot. And then you can see again, we pretty much opened near the high of the session. And then we proceeded to put in a bearish engulfing daily bar, which engulfed to the downside the two prior sessions and closed at the lows. This here was kind of the index to short. I think, obviously this move has already gotten underway. But basically, when we think about this chart, you've got this level here, this 297 level. There's lots of ways you can manage it. So if we're back over 297, if we're back over 300, maybe you're giving it even more room. But that's the point where you call uncle, you cry uncle, and you give up on this trade. But it's at least a thoughtful way to manage risk. It's the first time you've had a good opportunity here from a technical basis to short the Qs. It would be pretty tough to short the Qs all the way up in this, August run up, even as parabolic as it got. You had no early indication. You basically had this big drop here, which we all remember that day on the 3rd of September, but that came without much warning. Shorting up here was again a hard short to find. There were some divergences, but again, it wasn't really a clear kind of technical setup. So you had to be pretty tight and pretty short-term oriented to catch that. But here, I think you have, again, just the most clear sort of signal here where, again, you get this loud outside high volume reversal day failing at resistance, a great place to manage risk and put your stop against and know where you're wrong in this trade. And I think that's interesting. So that's kind of, that's sort of what I'm thinking of here when we think about the Qs, the SPY, really all these markets. If we look at the IWM, which is the strongest of everything, but if we go all the way back here, and I actually didn't draw this prior to this, so I don't know where this lines up, but let's try and find the all-time highs, which I think was right in here. So I believe this was the all-time highs for the IWM, and if we kind of zoom forward here, you can see that we did in fact close over the prior all-time high. So we got a new closing all-time high here in the Russell 2000. So I think this is the only major index where this stands alone here at a new all-time closing high. So this is a little bit different. And this goes to show where the strength is, where this sudden burst of rotation has come from. And I think that's interesting. I think the Russell 2000, certainly the spotlight momentum play right now. If it starts losing 170 by weekend and starts falling falling back below the old prior all-time high, then you can be a little more suspect here. But the Russell 2000's clearly kind of standing alone at this point in time. So when we think about everything that's going on here, yes, we've got some uptrends in place. The Nasdaq is the most concerning right now. The fact that it has started to underperform. And the reason it is important is not only because it's tech and because it's been a leader. Market rotation happens all the time, but the stocks that make up this index and these major ETFs, right? So Apple, Amazon, Facebook, Netflix, Google, these are just such massive weightings right now that it seems like it's going to be really hard for the market to rally without them. There's only so much heavy lifting the IWM can do. Obviously, this can continue to perform on a relative basis, but if the Nasdaq 100 continues to stay heavy, it's just going to be a tougher road on the upside. So what I'd really like to see is to get us back over the midpoint of these bearish engulfing bars that put in yesterday, get us back over 290 in the Qs, get us back over 300 in the Qs, get us back over 35 80 or so here in the S&P 500. That's what's going to get me just much more optimistic here in the very, very short term. Longer term, this could all just be noise in a range. But I think there's, some concern there, especially when you couple that with the VIX, like we talked about, back to the lower end of this range. So hopefully that makes sense. Hopefully that gives us a good guide there. We've got certainly some warning signs to pay attention to. And I think you have to be, obviously a more active trader if you're paying, if you're participating in those short trades. But I think it's something that we should be aware of. And risk can happen pretty fast. We talked about some of the gaps here. Obviously, we got into the gap yet today from back on Wednesday the 4th. We've got support down here, and it wouldn't even be surprising if sellers really picked up steam to just really retrace the majority of last week's candle. I think it's very possible for that to happen again. We'll see, and we'll take it one day at a time. And obviously, I will update my analysis and completely be fine with being invalidated here if buyers step in, put in a higher low, and start ripping us back over 300 in the Qs. So that's the read there on the broad market. Let's get into some other major markets. We'll look at volatility here. We'll go down to the daily chart. VIX went on a sell signal here back on Friday. Remember, it had this big rise up. It got back over our trend filter. It's been on a sell signal here. It's back down to around 25. It really shouldn't be that much a surprise. TLT, though, is sort of the surprise, right? And this isn't a new surprise because we started talking about the weakness, the persistent weakness here in the TLT a few weeks back. But here, if we look at the weekly filter on the TLT, you can see this has been in bearish trend now since the 16th. Since middle of October, this has been on a sell signal on the long-term time frame. And again, we talked about how this is different than any of the pullbacks we saw in recent this year, basically in recent history. So this is meaningful. This is continuing. This is persisting. TLT is still in a really tough spot, not doing any good of a job here hedging anything on market-wise. So something to, I guess, continue to pay attention to. If we go down to commodities next, we go to gold. Gold and silver on the long-term trends are in jeopardy again. They're still printing yellow indecision right now, but you can see prices below the trend filter in both silver and gold here. So if it stays low and it continues to, stay underneath 180 or so, gold could easily go into a sell signal. Same for silver, and that would certainly change the character here. You can see on the daily chart, they are printing a sell signal as of today. Gold is. Silver has not. Silver is still acting a little bit better here, and you can see it's not quite back to its lows. So on a relative basis, silver doing a little bit better than gold at this time. USO on the bottom left printing a fresh buy signal today. That's meaningful. It's notable. So crude oil printing a buy signal as of today's close. Now let's get into some individual sectors. A couple of the ones I want to highlight. First is energy, XLE, just an absolute monster session yesterday, 14% to the upside. And I think this is meaningful. I think this is potentially bottom worthy, right? I don't generally like to make big calls just because I think it's foolish to do so, and price and markets are way too dynamic to make some big call. But if I had to make a call gun to head here, XLE does seem to be bottoming for maybe a longer term bottom. The fact that we got as low as around 23 in March of this year, I consider this obviously it's really early and I'm jumping the gun, but if we call this a higher low here, then we just sort of made a higher low. We broke this downtrend. We saw incredible volume come in yesterday, and this could be a move that really just sees energy maybe not just rip all the way back up to 60 plus, but maybe at least gets us back into the 40s and it goes sideways and hangs around and just at least doesn't continue to waterfall lower. So XLE, I think it's interesting. I think it's meaningful turning point, and we'll see how this obviously plays out at the week, as the week sort of come through. So energy, I'd pay attention there. XBI. Biotech, I still think, is very interesting as well. This formation is technically holding up very well. It's trading at all-time highs, just under all-time highs. Good volume came in last week. You can see it's up this week so far. It's kind of consolidating up here. So XBI, I like it. I've liked it for a while, and it continues to seem to work. XLB, this is one that we were talking about here as well. This also working right now. Again, notice that this is clearly at all-time highs. When we looked at the S&P 500, it was still below the prior high. Nasdaq's below the prior high. XLB is something that is has certainly eclipsed prior highs, so this is again a nice spot to be. It's working. Might be frothy in the short term, but this is a good encouraging chart here, sector that has been looking pretty strong. In terms of the downside, in terms of some things, or at least some things I'd be cautious on. First is semiconductors, SMH. So again, SMH ties into this theme. This is market leaders. They are not leading right now. They basically saw, again, a loud outside reversal day yesterday, and they got follow through today and closed on the lows. So that's the key here. We got an outside reversal day, and then we got follow through, heavy volume. You want to respect that. Maybe it's temporary. Maybe it only leads to, a 3, 4, 5, 6 day pullback. Or it could be something more serious, more 10, 15% correction. So we'll see. This is the time to take notice, though. SMH, I think there's your warning sign. XLC, I'll also throw that in there as well. Communication services. Again, you basically got a high volume reversal day yesterday. Didn't even break to new highs here. Came in as a potential lower high. Not the most convincing follow through today, but still a negative day. So again, I think your warning signs are here in tech, growth. Large cap is, kind of where the guard is changing a bit. So that is it. I think that is basically everything that I had, or at least the majority of it. So feels good to be back. Thanks as always for tuning in and watching. You can subscribe to our YouTube channel or follow us at The Trade Risk. Have a great rest of your day. We'll see you back here tomorrow for some swing trade ideas during the market session.